Now it's been a day of bloodbath in the markets, mirroring a global trend. The Indian stock markets crashed this morning. The BSE Sensex was down 1,240 points or 3.57%, and the Nifty fell 369 points or 3.47% during the opening hours. Asian indexes tumbled as well. Markets in Japan, South Korea and Australia dropped sharply. The market crash mirrored massive losses seen in the Dow Jones, which witnessed its worst crash in over a decade. Now, the Dow Jones Industrial Average tumbled to 1,175.21 points, or roughly 4.6%, to close at 24,345.75, breaking below the average at 25,000 level. And Japan's Nikkei slipped more than 6% as stocks through cross sectors pulled back. Automakers, financials and technology names were lower in the morning as well. So what exactly are the reasons behind the bloodbath in the global and Indian markets? Well, we break it down for you. Firstly, the record fall in Dow Jones Index over the last decade triggered the fall, including the bond yields. Inflation was up in the United States, which raised concerns among various investors. Fresh U.S. wages data was recently released, and as new U.S. Fed chairman took over, there were also concerns about a more hawkish policy in the United States. Then there was massive sell-off in the global markets, also affecting Asian markets. Of course, another reason to attribute this to would be overdue correction of the markets. Also, low investor mood after Indian budget. Joining me live on the program is our business correspondent, Sumit Chaturvedi, as well as Mohammad Saleh. Coming to you first, Sumit, this particular, about the stock market's eye-watering slide on Monday, it is not caused by anything fundamental. So what would your reasons be attributed to?
Well, the US market sell-off has triggered the sell-offs everywhere in the world. It is behind the rout seen everywhere in the world, including Asian markets and including India as well. US market, the Dow Jones down by around 1,600 points, the worst fall in history, mainly because of two reasons: the bond yields that were high, also the inflation data that is pointing towards a high inflation. So if the bond yields are high, money from equity market will flow into bonds market, which are considered as a better investment option. That's one reason. Second, inflation data is really on high inflation is a negative for markets. That's what has happened in US markets, and the bubble which was being called something which is been building up from the last 1 year has come down since last night. After US markets crashed, the markets opened in Asia and they also crashed. Nikkei, Hang Seng, Straits Times all opened down, and Indian markets, Sensex also opened with loss of 1,200 points. So here the US triggered, as we say that if US catches cold, the world freezes. That's what we have seen happening today as far as global markets are concerned. Sensex and Nifty both are trading down at this moment as well. Clearly the starting point was LTCG that was announced in budget last week, but since then it's been third day in a row when markets are crashing down.
Right, Sumit, to stay with us, we're also joined by Mohammad Saleh. Saleh, what particular reasons on how you see the markets are behaving since morning? I think you're standing by with lots of information for the viewers on how the markets have been behaving since morning, when we saw the third day continuous crash. The stock market.
Jessica, over the last 2 quarters, what we've seen is the rise of markets around the world, and this is exactly what we're seeing even in the Indian context as well. The BSE Sensex and the Nifty 50 have been at historic highs. But let me actually take you through as to what has in fact happened this morning. At 9 o'clock till 9:15, when the markets opened, they immediately plummeted down by 1,200 points. It was a clear 3.5% that was shaved off the market capitalization. Immediately after that, there was a bit of a recovery, and then slowly, this perhaps was the best trading point through the day. But despite this was almost about 800 points down from yesterday's close. Now, since then, it's been a pretty low-key affair. It's choppy trading that's in fact continuing to go forward. At about 10:17, roughly an hour after the market had in fact opened, it again was pretty much trading at about 1,200 points afterwards there's been a bit of a recovery as well. So at this point of time, the market is still down as much as 1,100 points. There are several reasons as to why this may have happened. But the fact of the matter, Jessica, at this point of time is, what has got everyone worried is because the market fundamentals appear to be on very, very solid grounds. The economy is booming. This is worldwide. It's happening in the United States, Europe, China and Japan, where the economy is clearly on the upswing. But because in the last 2 quarters, for the last 6 months, the stock markets around the world have just been, touching new historic highs. This was a correction that was perhaps expected. And also what is being talked about, one of the reasons as to why the Dow Jones has collapsed yesterday, something that a lot of these analysts are talking about, is perhaps because of the programmed artificial intelligence guided trading that's taken place towards the end of trading at Dow Jones, which is said to have been, one of the reasons that has contributed to the crash of the market. And this is exactly something that was reflected in the markets when they opened this morning in Australia, Japan, which have been trading down by as much as 6%.
Right. And Sumit, if we talk about, there was no particular news that drove, major averages to capsize because markets are, of course, run on sentiment. But instead, you feel that the market took a mind of its own, where sentiments like, particularly computer program training sent Wall Street into a terrible tizzy of sorts?
Well, that's a technical reason, and there are always technical reasons that cause the market crash, as they have been causing in history as well. And yesterday also there was a technical reason behind this. But overall, looking at the macro picture gives the overall reasons why markets are coming down world over. And US markets clearly were down yesterday based on this macro picture. Also, the Nasdaq, the tech boards, as far as US is concerned, it is also under pressure since Apple new phones are not doing as well as expected. Since then, when Apple results came, the Nasdaq is also under pressure. And looking at that, overall global markets have come under pressure because of yesterday's US sell-off that happened in Dow Jones.
And Saleh, as we were talking about how what kind of a plunge the markets all across Asia, since it's the effect coming in from the United States, the market crashes, it plunges, the Dow plunges, so it affects everyone in particular. But is there anything to worry about for Indian investors, or perhaps it's their day now?
It all depends on where they have in fact bought their shares at this point of time, Jessica, because if you were to look at the market, it's about 33,500 is where it is trading at this point of time. It's difficult to predict as to where this market will go, because if you were to just turn the clock back 6 months ago, the market was trading roughly at about 25,000 in terms of its market capitalization. So in the last 6-7 months, we've seen the market rise by as much as 10,000 points. And this was a correction that a lot of experts are saying was in fact long overdue. Is it a good time to buy? Well, one needs to exercise a bit of caution at this point of time if you want to be saving your money, because at this point of time, the sentiment isn't exactly upbeat. Because like I started out by saying, it's not clear as to what has led to this sudden crash, because it is not just what has happened in the United States, because when the markets opened this morning in Australia, China, Japan, Korea, Taiwan, every single market has crashed by as much as 5 to 6%. And that, of course, is a cause of concern, because it now remains to be seen as to where, Sensex and Nifty will progress from here. It's tough to predict, but, in terms of trading, this is a definite no-no kind of market.
Absolutely.
Some of the analysts are saying if you want to invest for the long time, then probably, you can still go ahead and buy.
Right, Saleh. But last question to you here, Sumit. Many are blaming the Fed for this market breakdown, or at least the mentality that led to the selling climate in particular.
Well, incidentally, this is happening at a time when the new US Fed chair, Jerome Powell, has taken over, and he's replacing Janet Yellen. We'll remember, Janet Yellen has seen US economy in worst of its times, and the kind of overall procedure she's adopted and overall strategy she's adopted, that has really helped US economy sail through the worst times. Now comes the era of Jerome Powell, who has been untested so far and who has been hawkish in his policy. That's one reason why US markets have also reacted in this particular way. He's known to have some hawkish stance towards the rates, and that's what US economy or US stock markets were not prepared. So Jerome Powell is also, yes, we can say that he's taking over one of the reasons why markets are behaving in such way.
Right. Thank you, Sumit and Saleh, for joining us on the program and breaking it down for our viewers on what exactly is happening to the markets in India and across the world.